Right, let's talk about China, a country that once stood at the very heart of the crypto world, shaping trends and setting the pace for global innovation, only to slam the brakes with a sweeping, all-encompassing ban that sent shockwaves through the industry. It's like the world's biggest pizza lovers suddenly banning cheese, confusing, dramatic, and leaving everyone asking, why would they do that? China hosted a massive chunk of global crypto mining. At one point, more than half of the world's Bitcoin was mined here. So when Beijing said no more, it was a seismic event that rippled across continents. Investors scrambled to react, miners packed up their rigs overnight, and the world was left scratching its head, trying to make sense of the sudden shift. Why would a global superpower willingly eject itself from a technological and financial revolution that could shape the future? The answer is a tangled web of power, control, environmental anxiety, and a vision for the future that's uniquely Chinese. To understand, we need to look beyond the headlines and dive deep into China's real motivations. What's really driving these bold decisions? It's about protecting its currency from outside influence, fighting pollution caused by energy-hungry mining operations, and positioning itself for global dominance in a new era of digital finance and technology. So buckle up. We're about to unpack why China, once leading the crypto charge, decided to build a digital Great Wall around its financial system, shutting out the world. Was it about protecting everyday citizens from risk, or is there something even bigger at play here? Genius move or colossal misstep? The debate rages on. By the end, you'll see the high-stakes game at play, one that could reshape the global financial landscape. And trust me, these stakes make Monopoly with your most competitive uncle look tame by comparison. Before the ban, China wasn't just a player, it was the game. Picture warehouses of computers mining Bitcoin, powered by cheap electricity in Sichuan and Inner Mongolia. At its peak, Chinese mining pools controlled over 65% of Bitcoin's global hash rate. China was also home to major exchanges like Binance and Huobi, making it the world's most active crypto market. For millions, crypto was a wild new way to invest outside state-controlled markets. The government's attitude? Complicated. They liked blockchain tech, but distrusted the currencies. Warnings and crackdowns came, but a total ban was always just out of reach. This crypto golden era was a paradox. The heart of decentralized finance in the world's most centralized state. Innovation and profits soared, but all outside Beijing's direct control. And if there's one thing the Communist Party dislikes, it's losing control. The clock was ticking. This golden era was living on borrowed time. The tension between innovation and authority was about to snap. And when it did, the world felt the shockwaves. Now we get to the heart of the matter: control. In China, the ability to direct the flow of money isn't just a policy, it's a core pillar of how the country is governed. For China's government, controlling money is everything. It's the foundation of power, influence, and national stability. Every yuan in circulation is carefully watched. The state-run banking system and the yuan are levers for managing the economy and ensuring social stability. Through these, the government can guide growth, prevent crises, and maintain order. Cryptocurrencies by design are decentralized and operate outside government control. They're borderless, fast, and nearly impossible to fully track. For Chinese citizens, crypto offered a way to bypass strict capital controls and move money abroad, sidestepping the government's watchful eye. This was a massive threat to Beijing's authority, undermining the very system that kept the country's finances in check. Imagine trying to seal a terrarium, only to find someone drilling invisible holes. That's what crypto looked like to the government. It was a challenge to their carefully constructed barriers. It risked capital flight, destabilizing the yuan and the economy. Billions could leave the country in seconds with just a few clicks. Plus, crypto's anonymity made it a tool for money laundering and illicit activity, further eroding trust in the system. The crackdown was a calculated move to reassert control, plugging the holes and shutting down a parallel financial system that threatened the status quo. The message was clear. There's only one financial system in China, and it's the one we run. No exceptions, no alternatives. This was as much a political decision as a financial one, reinforcing the party's grip on every aspect of life. The Communist Party wanted to remain the ultimate authority, especially over money, the lifeblood of the nation. But was it just about control, or was there more to the story? Was China preparing for something bigger? The answer lay in China's next big move, a bold step that would reshape the future of money itself. While banning Bitcoin and other decentralized cryptocurrencies, China was quietly building its own digital alternative, the digital yuan, or ECNY, right under the world's nose. Unlike Bitcoin, which is decentralized and anonymous, the ECNY is fully centralized and traceable, a digital cash with government superpowers designed for total oversight and control. Every transaction can be monitored in real time, giving the central bank unprecedented economic insight and the ability to respond instantly to financial trends or risks. Why let Bitcoin thrive when you're launching your own digital currency that you can fully control and regulate? The government needed to clear the field. Banning private crypto eliminated competition and steered 1.4 billion people toward the ECNY, making adoption almost inevitable. It's classic business logic. If you're launching a new soda, you don't want Coca-Cola on the shelf, you want your product to be the only choice. The digital yuan is also a global play. China wants to reduce dependence on the US dollar and make the yuan a force in international trade, reshaping the global financial landscape. If other countries adopt the ECNY, it could challenge the dollar's dominance and shift the balance of power in global finance. So the ban wasn't just about domestic control, it was a strategic move on the global chessboard, positioning China for future influence. China is betting big on its own digital currency, investing heavily in technology, infrastructure, and international partnerships. The question remains, will the world want to play by China's rules, or will they resist this new financial order? The stakes are global, and the outcome is far from certain. The world is watching closely as this financial experiment unfolds. But one thing's clear. China wants to lead the future of money, setting the standards and writing the playbook on its own terms. And it's willing to rewrite the rules of the game to make that vision a reality. Let's talk about the environment, one of China's main justifications for the mining ban. Bitcoin mining is energy hungry, with China's operations once using as much electricity as entire countries. This clashed with China's ambitious carbon-neutral goals, especially since much of the mining relied on coal. The government needed to show commitment to climate promises, and shutting down mining was a powerful PR move. But was it really about saving the planet? For years, the government tolerated coal-powered mining, so why the sudden change? Environmental concerns made a convenient excuse for a decision driven by control and financial motives. Even clean hydropower mining strained local grids, causing instability. Ultimately, Beijing decided electricity should power homes and factories, not speculative digital coins. The mining ban was as much about resource allocation as it was about going green. The message, China's priorities come first, crypto comes last, and the world took notice. Another reason for the ban: economic stability. Crypto is volatile, prices swing wildly, and fortunes are made or lost overnight. For the government, this speculation looked like a dangerous bubble, reminiscent of China's 2015 stock market crash. The fear millions could lose life savings, leading to social unrest. Crypto's unregulated, casino-like atmosphere was a risk Beijing wouldn't tolerate. Fraud, scams, and hacks were rampant, costing people billions. For a government obsessed with social harmony, this was unacceptable. The crackdown was a paternalistic move, protecting citizens from risky bets and financial predators. Stability trumped individual financial freedom. The question, should the government shield people from risk, or let them choose? China's answer was clear: stability above all, and the crypto world had to adapt. China's crypto ban is also about long-term strategy. The government wants to lead the next wave of tech innovation, on its own terms. They support blockchain, but only the controllable, state-approved kind. By banning private crypto, China creates a protected market for homegrown blockchain and the digital yuan. It's the great firewall playbook: block foreign competition, let domestic giants thrive. This is also about national security, building an alternative to US-dominated financial systems. China is betting its top-down approach can out-innovate the global crypto community. Will this walled garden foster innovation, or stifle it? Only time will tell, but China is playing for the next century. The world is watching and learning. After the ban, chaos hit the crypto world. Bitcoin's price dropped and mining power vanished overnight. But the network adapted. Miners migrated to the US, Kazakhstan, and Russia. The US quickly became the world's top Bitcoin mining hub. Ironically, China's ban decentralized mining, making the network more resilient. For China, the ban achieved its goals. Less speculation, a clear path for the digital yuan, and a green PR win. But it also meant losing leadership in a multi-trillion-dollar industry. Talent and innovation fled, and Chinese tech firms were hobbled. Meanwhile, the global crypto industry grew stronger, surviving the China ban stress test. Underground trading persists in China, proving decentralized tech is hard to kill. The world moved on and crypto routed around the Great Digital Wall. China's grip tightened, but the network endured. The game changed, but it didn't end. So, was China right to ban crypto? It depends on your perspective. For the Communist Party, it was about control, stability, and long-term strategy. Crypto was a threat on all fronts. For free market advocates, it was a mistake. China chose control over innovation and handed opportunity to rivals. The ban raises big questions. Should governments dictate what people do with their money? Is safety worth sacrificing freedom? China's answer, yes. The crypto movement's answer, no. This is a clash of ideologies, centralized power versus decentralized networks. The verdict isn't in yet. Maybe the digital yuan will succeed, or maybe China will be left behind. What's certain, China's decision reshaped the global crypto landscape. It was a bold move with massive consequences. The final judgment will be written in the code of the future.